Do you struggle with trade management? Do you enter the market with no real game plan? Do you feel yourself at the mercy of the markets? Well, we provide a theoretical framework of how to think like a professional trader, always 1 or 2 steps ahead. And in addition, there are real life examples of how to convert the theory into practice. And if you enjoy the video, don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. Please take a read here through the disclaimer and the copyright. We'll leave effort versus result here with a quote from Wyckoff. Tape reading is an art in which one can become highly expert and more successful as experience sharpens his instincts and judgment and shows him what to avoid. Tape reading certainly is an art. You need to learn principles, concepts, price action, understand market behaviours and dynamics, etc. But the way one can use and apply the methods or techniques and how you create your setups is uber discretionary. It's very personal. And at its highest level, it is an expression of yourself. It is artistic. And unfortunately, like most things in life, to become an expert in this field and to be able to read the market bar takes time and effort. This is a prerequisite. And it is so true. As your skills develop, your instincts and your judgment and understanding of the background conditions will help you to avoid making bad plays. You learn certain environments that are more favourable to a certain mindset, ergo you know how to apply or which strategies to apply in which situation determined by the background conditions. One more Wyckoff Extraction. Most people read the tape after they have made a trade in order to see how their stock is coming on. Bad practice. They should study the tape beforehand, decide when to trade, when to hold on, and when to close out. The tape will tell them all of these things if they know how to read it. An interesting quote from Wyckoff that illustrates the nature, the essence of our trading, understanding the tape, being able to identify the supply-demand imbalance from a macro perspective. Who's in control? Buyers or sellers? Can we ascertain a bias? Then once we have, we can refer to the chart and we can begin to construct scenarios. And if it unfolds in said scenarios, we can initiate a play. But what's of importance, what I'm trying to convey, is that we are 2 or 3 steps ahead of the market, rarely caught off guard like a rabbit in headlights. Let's go through some examples using this quote to help clarify this statement. Case study A here. On silver, via a 60-minute time frame, we can add support and resistance. We have a trading range. So can we establish who's in control within the trading range? Buyers or sellers? Is there a bias? Yes, there is a bias. Let's quickly dissect the chart. Well, first of all, the buying at support is better than the selling at resistance within the trading range. Support here, buying here, buying here. Little bit of buying here, buying here, buying here, buying here. There's all forms of buying down here. Where at resistance, we kind of only get this one interaction over here and over here. So we can see that the buying at support is better than the selling at resistance within this trading range. And we can also see that the reactions down here are pretty poor. Buying bars here, better than the selling. Buying bars here, better than the selling. The buying bar here, better than the selling, etc. This buying off the lows we would call a buying zone for obvious reasons. Every time price dips into this green zone, there are active buying participants. Let's call them the CO, the smart money. Now we are making lower highs here, granted. However, look at this bar. Boom. We break out above this local action with a good wide spread. In fact, one could argue and say that this is the best buying bar we have seen within the trading range. So right now, as the market via the close of A here, we must be thinking, which is hinting towards a break. How can we utilize this? Well, there is a strategy, as you know, from part 1, the backup action. We want the market to break through and test, and it does so successfully over here at B. There's no depth here. We're not considering the sign of strength break. We're not doing any bar analysis to support. Literally, this exercise or study is just to illustrate a point. The trading mind. The thought process was made way in advance, perhaps even down here. When we can see this active buying here, we're already thinking, well, we want the market to prove itself with good buying by breaking through this resistance area, and then we want to look for the test. All of this is made in advance. We're not reacting to the market blindly as it unfolds bar. To point number 2 from the Wyckoff Extraction, when to hold on, a trading range builds cause, and the effect is the subsequent trend. So logically here at B, price hasn't started to trend. We're at the beginning of the trend. The trading range here to the left is a form of accumulation, and the trend is markup, phase 2 within our Wyckoff price cycle. So hold on to the trade because we have causality directly to the left. The background here provides this information. Ergo, don't cut your trade short. If you're long here, we don't cover here at resistance. Now there are further tools to the advanced tape reader. That comes in the form of price action as it unfolds, and one can also use P&F projections, etc. Point number 3 from our Wyckoff Extraction, when to close out. Now in this example, we have cause, and this has a direct relationship with effect. Greater the cause, greater the effect. And if the markup, being effect, the subsequent trend being phase 2, has exceeded the energy created within the trading range, the trader should be on alert to look for negativity and potentially close out. There could be higher time frame resistance above. This is a 60-minute time frame, and price could be heading towards weekly resistance. This could be a potential area to cover, or any other overt negative price action, like here at C. Look at bar C, a huge spread out of nowhere that closes off the highs. Now we don't have any volume here, but we know there's an awful lot of selling and activity within this bar. We don't know what this means. It would be wise to at least partial cover here. And like Wyckoff stated, the tape will tell them all of these things if they know how to read it. And that's what we do at Acme Trades. We are bar tape reading specialists. On to our last study for today. And again, this is silver on a 60-minute time frame. So we can add support and resistance being here. This is our trading range. Can we establish who's in control within the trading range? Buyers or sellers? Is there a bias? Yes, there is a bullish bias. Once again, we have buying at the lows. Buying here, buying here, buying here, buying here, buying here. Compare that to the selling at resistance. The buying at support is better than the selling within the trading range. There is also additional strength within this trading range. Not only do we have this buying zone here at the lows of support, look at this rally to A here when we break through this local level of resistance. Note this reaction here to B. And here I will dig a little deeper into advanced tape reading. Note the rally to A here on this volume, and then the pullback to B here with higher volume. So with higher volume coming down to B, we're unable to break support. We have restricted price movement to the downside. There's no ability to push price lower. And if we were to cumulatively add up this volume, this would be known as effort versus result. Think about this action. With higher volume, price cannot break through. It cannot move. It's restricted. And the only force that stops lower prices in this case, as we're trying to come down, is buying. Ergo, this would be bullish effort versus result. And we have ease of movement going up. So we make this much progress to the upside on volume like this. We have ease of movement going up preceded by bullish effort versus result in the reaction. Then see over here, look at this volume. There is no supply. There's no force that can take us down here. Look at the volume. And then boom, bar D breaks through the local price action here above this local level resistance with a pop in volume. There are active buyers coming into the market. We're closing above all of this recent price action. Clearly, we can establish a bullish bias. We have a buying zone, an ease of movement rally, bullish effort versus result, no supply via a breakout to the upside. Good demand. So in advance from the close of D here, we would construct a bullish scenario. And we need to see that unfold by breaking through here, this resistance level for my trading range, and testing back here, which occurs picture perfect over here at E. Beautiful. We get a good momentum drive through resistance here. We come back to test. We bounce off support as we close off the lows before boom, we break on through to the upside. And we see buying exactly where we should, at support. And as there is cause being built, as this is a trading range, we want to hold on to our trade. Because the effect, the pent up energy created within this cause, has much more to exert, i.e. higher prices. And we know this in advance, and this is what Wyckoff is referring to. Lastly, when to close out if you are in position? Well, as you become more experienced about market behaviour, one can isolate specific areas on the chart where price is likely to struggle. This could be, for example, if you're bullish, supply zones, confluence areas, high volume bars, high time frame structure, etc. And in the immediate, unforeseeable future, this would be overt bearish action, such as a buying climax. Thank you for taking the time to complete part 2 of the Wyckoff Beginners course. It's an insight, an introduction to the trading techniques and tools of analysis that we utilize to define our trading edge at Acme Trades. Some of the recent analysis may appear a little complex. As stated before, my intention is not to overwhelm newcomers to our methodologies, but I feel compelled to share with you what I see on the chart, and hopefully this triggers or ignites something inside that spurs you on to continue learning the art of bar analysis. There is no better methodology in the world as far as I'm concerned. The level of detail advanced tape readers can obtain from the chart is unparalleled. But it's not easy. Like any endeavour in life, you get out what you put in. Yes, it takes time, effort, and resilience to walk the path as a trader. However, the rewards far outweigh the process. And I'm not speaking financial. This is merely a byproduct of your skill. The person who you become during the path to trading mastery is undervalued. The markets will test you every step of the way. There will be highs and lows, and through it comes growth, character development. You will understand things about yourself you never knew, and this is the true value of becoming a trader. Trust the process. Enjoy the journey. Now, if you have any questions, please feel free to email me at will@acmetrades.com. And if you have any further inquiries into additional courses, please email info@acmetrades.com. Finally, my last extraction from Wyckoff, the most powerful of them all: the solution to the stock market lies in the ability to interpret supply and demand. The solution to the stock market lies within the ability to interpret supply and demand. And that is what we do at Acme Trades using the art of bar volume analysis. Thank you very much. To help cement the newfound knowledge, we have constructed a free interactive workbook full of the charts found within the course. Go to our website www.acmetrades.com and explore this resource. That's all, folks. Thank you for listening to this video. I hope you found it informative and extracted value. Don't forget to give us a like, subscribe, hit our notification bell to stay updated on our latest videos. We value your feedback and suggestions, so please leave a comment below and let us know a topic you would like us to cover in future videos.